Good afternoon, ladies and gentlemen, and thank you very much for joining us today. I've got a special guest in John Kaiser. We're going to be talking about what's going on in Australia, because there's lots of big things happening in Australia. And John was the one who got me interested in what's going on there, enough that I recently recommended the stock. Well, probably about 50% ago, but it's done really well. And so I thought I'd get the guy who brought the attention to the deal on a show. John, thank you very much for joining us. You ready for us?
Alan, it's good to be on your show.
It's been too long, John. We had a lot of fun in our past shows, and this is a big topic that I want my audience to know more about. So let's get right at her. How does that sound, John?
Sounds good. Zombies are boring.
Why don't I tell
winners
you?
Are more fun.
Why don't I tell you about where I've come from, John? And you know, I know that the story's been around for a number of years, but what really got my attention was when I heard you talk about the Capval craton and that these two cratons, one in where the Wits number 1.0 is, and then where this new Australian stuff is that Novo's involved with, and now Novo's on everybody's tongue, but or on everybody's mouth these days, John. But you were the one who really brought the interest to it. So let's start there at why I got interested in it. And let's start talking about where we are today and what's going on, John, with the play.
Well, the play, Novo and its Wits 2.0 story has been around for 6 years, originally on the Canadian Stock Exchange. And they were in that eastern part of the Pilbara, in the Marble Bar, Nullagine area, where there's some sub-basins there, where there is actually nuggety type gold in conglomerate beds. And it's been known for many decades. And Quentin Hennig went there to see if he can figure it out. And, you know, a couple of years ago, they realized, you know, it isn't that extensive down dip. The grade isn't quite high enough. It is not as good as Wits 1.0 in South Africa. And they kind of settled down to, okay, let's put these 300,000 to 500,000 ounces into production as a small scale mom and pop type operation. And they finally got listed on the Venture Exchange. And they raised $8 million in late April, early May, on the basis of the PEA that they're going to have for this, you know, small operation. You know, Eric Sprott was there. He's there for the optionality trade. You know, gold's going to 5,000, 10,000, all that sort of stuff. And what they did not understand was that Quentin Hennig had been told by a guy he had to lay off from the Beaton's Creek project because exploration was done. It was now into development. Alan Ronk had done some work for Artemis Ventures on its Purdy's Reward property, which they started talking about in November last year, and didn't make sense what they said. So they brought in an expert, and he did his consulting work. They put out their news release. It was there and talked properly about conglomerate hosted gold nuggets, and very unusual. But the Australians were asleep at the switch. They didn't understand. Alan said, you know, you should read this news release to Quentin. And Quentin did. And basically, he kind of freaked out because he realized this is what he's been looking all along, 350 kilometers to the west.
Somebody else is figuring it out.
but he had the mindset to, like he was geared on this idea. There's a precipitation theory behind why this gold exists. If it's true, it exists everywhere during this period when the chemistry of the water was changing. So gold would be over a huge, huge area, except it wasn't in that Beaton's Creek area. It was sort of smallish and not well developed. And this other area, he knew it was prospective, but the formation seemed wrong. The work had been done in the past. But when he checked it out, he says, holy mackerel, this is incredible. And he went and staked all this land, all the garbage rock that the Australian juniors had ignored because it obscured the real prize, which is the Pilbara greenstone basement rocks that hosts shear and vein controlled gold deposits, lithium deposits, other goodies from 3 billion years and older. But the younger rocks, the Hardy sandstone, the Mount Roe basalts, that was all tombstone, worthless rock. So all of this was available down dip from where these beds were daylighted and were discovered by fossikers, Australian prospectors with metal detectors. So he's tied up 7,000 square kilometers.
John, I got to tell you, when I heard the metal detector story, man, I was a little skeptical at the start. but it's proven they did it on TV there, or on video the other day.
Well, there's a whole Australian series called Aussie Gold Hunters, which I guess is the Australian variation of the North American placer miners. And they use metal detectors, and they run around mainly down in the Kalgoorlie district, and they look for sort of the traditional gold nuggets that come from quartz veins and so on. This stuff up here was different. It's interesting, even though they were finding these weird shaped nuggets, nobody seemed to have twigged that there was something odd and strange about the kinds of nuggets they were finding up near Karatha at the northern.
They're all the same shape and relative size, eh, John?
That's not true. Those are just the ones that have become prominent. If you look at the gold they got out of that half-ton sample from Purdy's Reward, there is a whole distribution of nugget sizes. And there was even a fine gold component in that sample that averaged 9 grams per ton, which if you have a deposit with 9 grams per ton in it, that's pretty good.
You can open pit it, you'll make nothing but money.
Yeah, except I'm not sure there's going to be too much open pitting. Interestingly, these crazy little Australian companies that really avoided all these nasty Mount Roe basalts when they were chasing their lithium and shear-hosted gold systems, they couldn't avoid picking up these scabs that are left over in the northern part. For example, Degre Mining, which has a very large land position focused on about 1.2 million ounces of whatever it is, 2.5 gram gold type of a system. They ended up having these pieces of basalt, which turn out to be covering conglomerate beds, and one of them, Loudon's Patch, actually has gold nuggets spilling out the side. So these things, if they're up to 5 meters, 10 meters thick and have this kind of rich nuggety gold in it, they'll probably be able to scrape the top off this, strip mine the waste rock, turn it into aggregate for roads or something like that, and then just strip mine the conglomerate bed. So there's a possibility that some of these juniors could end up having incredible windfalls. Nothing WIT's 2.0 scale, such as Novo has, which could literally be
a couple million ounces that you can make money producing. Nothing wrong with that.
Yeah, 1 million ounces of half ounce to an ounce. That's a pretty big score. You got 1 billion shares out, you're trading at 1 cent, and so that's a $10 million market cap. A 1 million ounce high grade deposit, that's worth $300-400 million.
Now, John, I've heard a few different theories of how this has got there, and I heard one yesterday that Bob Moriarty wrote about 100% confirmation of the theory, and it was on a Stockhouse post. And you and I talk often, and I often look at things in like a diamond exploration project, John. And when I was hearing this, I was kind of hearing like, this sounds a little bit like a widespread dike with a long strike, and then down dip it goes forever. Is that, can you give us a little, so the average dude out there can figure out what this sort of story is all about on how the gold got there, because it's becoming, an interesting part of the whole story now.
Well, in terms of sampling, there is a similarity between, say, a kimberlite dyke, and diamonds are, of course, a nugget effect. Now, a kimberlite dike is an intrusion, an igneous intrusion that comes in, exploits some crack, and laterally covers a large area. The Snap Lake dike that De Beers bought for $500 million and put in production for $1 billion. That's an example of a kimberlite dike. In this case here, what we have is we have a basin at the edge of the the granitoid greenstone older rocks, and between
kind of like a swimming pool, if you will, and a couple billion years ago, that was the bottom of the swimming pool idea.
Well, it was like a continental shelf. So the water comes up to the edge, higher up in the mountains. Some sort of granitoid causes doming, raises up the rock. Mother Nature with her rain, and back then very acidic rain. So it just tears these mountains down. It all erodes. All this stuff, rivers, traditional rivers, take it all into the basin. And in this sense, it's a typical sedimentary basin. And where they are, the boulders and cobbles are much larger than they are in South Africa. There, it's much smaller quartz pebbles. It's clearly been worked downslope into the lower energy environment. The bigger rocks left behind. This is what they call it, an immature conglomerate because of the random size range of the cobbles, and it's closer to near shore in a high energy environment. And so this would have existed, along the entire shoreline. And the intriguing thing is, how can gold end up like laterally? Usually you follow the river, it drains into the basin, it then wanders back and forth, creates this delta type thing and spreads this stuff around. But here it seems to be much wider distributed. Now, one could still argue that at Comet Well and Purdy's Reward, which is about 10 kilometers, okay, this is some river fan and it could be stuff eroded. But then you have this again, 130 kilometers to the east at Degre's Loudon's Patch. And when I was visiting with Quentin the site, he took me driving all over the place, and even onto the old greenstone basement, where he was showing me these little islands, what I call scabs of basalt, and he was showing me the little holes Fossicers had done. And holes are really indicative because this nasty spinifex grass, it spikes you. They don't want to work in that area unless there's a payoff. So where there's holes, there's gold coming out of the ground. They don't dig holes if that beeper doesn't work. And there's no nails and crap like that, bottle caps in this area. If there's anything metallic, it's gold. So this was all over the place. These sheets of conglomerate extended all the way to the ocean, maybe even under the ocean, because the Pilbara, I think, has another 50 to 100 kilometer underwater to the north. And there's no way that this kind of stuff came from some little gold vein or whatever sticking up in the hills that got eroded and then funneled into the basin.
You brought up a good point there, John, that I wanted to ask you about. Being in the diamond business, we have to look at those diamond indicator minerals for indications, not only chemically, but also physically, how they've been changed during transport. And what you brought up there that really interests me is the difference between WITS 1.0 and 2.0. In WITS 1.0, it's my understanding it's a lot more lower grade disseminated, where this is big chunks of gold. What's the difference? Why is WITS 1.0 this more fine and this WITS 2.0 more coarse?
Well, the Witwatersrand Reef gold, when you look at them on a microscope, they have this detrital placer appearance, which is why everybody assumed, okay, these have been moved around, and that's how they get their rounded look. But they're tiny in comparison, like that 1 to 2 millimeter in size. And I think what's happened, and this is an idea that I think Quentin is speculative playing with, is that what's in the Witwatersrand is perhaps downslope, remobilized from the original growing locations closer into the nearshore environment. and it's been moved down and made smaller and all this kind of stuff. And when you go upslope at the widths, what we're seeing in the Pilbara, it's not there. In fact, what's interesting about the Pilbara, and of course it was at some point attached or very close to the Cap Val, is that this conglomerate bed seems to be sitting on the basement rock, whereas the quartz pebble conglomerates that have the gold in the Witwatersrand basin, it's higher up with other levels of sediments in between. Here we have it like there's almost a 200 million year gap between the older craton rocks and then all this garbage, this conglomerate stuff, and then comes this Mount Rowe basalt. There may have been some other earlier ones mixed in, but it sits on top like a cap and would have and seems to have protected it. And this is the interesting thing, because if this was a widespread phenomenon and we had these nuggets growing in Australia on such a laterally extensive way, and then this Mount Rowe basalt came on and just buried it, protected it, shielded it, and then other stuff piled on, nothing ever eroded it. Whereas in South Africa, if this existed, it got eroded and dragged farther into the basin where it got resorted and created these huge deposits, laterally expensive deposits, quite narrow. Here it could actually be thicker because it's earlier. These, well, I mean, and the formation of gold is probably the same time frame, but the original location, we're dealing with probably close to original location for these gold nuggets.
So no reworking
and there'll be a log normal distribution, just like with diamonds. You'll have some that are growing larger and others are growing.
Now, before you get onto that, John, I do want to get back to that, because much like we deal with in diamonds, bulk sampling is very important to get, because we're dealing with some statistics here. But the thing I wanted to ask you before we move on to that is, I've always known you, John, to be a responsible promoter when, you know, you get excited about the right things. And I've heard you say that this could be bigger than WITS 1.0. And obviously that's an extremely bullish statement and promotional. And I'm wondering, is the coarseness of the gold is that an underlying reason that gives you this confidence to make those? Like when you described it there, John, it sounds to me like that in situ gold could be much higher grade than chasing that fine grain gold that they've been at WITS for 50 or however 100 years or so.
Well, the really big question right now is we still don't know how laterally extensive these gold nuggets are. And we also don't know what the distribution is locally. We've got one pit. We've got the anecdotal example of all these fossickers picking up nuggets here and there. But when you finally measure it all, maybe this stuff is just like Beaton's Creek, you know, 1 to 2 gram per ton gold, maybe okay for open pit mining, not so good for underground mining. We just don't know. I mean, right? But this is why it's going to take 3 to 6 months for WITS 2.0. And by WITS 2.0, I don't mean exactly the same thing as the Witwatersrand WITS 1.0, but I'm talking about the scale, the incredible scale. I mean, I think 1/3 of all the gold ever mined came in the last 130 years from the Witwatersrand Reef. It's the pure scale, but the grade has to be at a level where it's commercially mineable. You may be able to open pit some of the stuff where it daylights, but pretty soon you're going to have to go underground. So what is the average grade? How systematically is it distributed? This is why the precipitation theory is so intriguing, because here's a mechanism by which the water is going to be roughly the same. The algae, the cyanobacteria, plankton and that growing there. And Quentin showed me something they'd found from Purdy's Reef, where he showed me a piece of carbonaceous shale with gold stuck in it. So there is evidence that even in this near-shore environment, there was this plankton activity there. And this is critical because it's the oxygen generated by the photosynthesis, which alters the chemistry of the water, creates a disequilibrium so that the seawater, in which there's lots and lots of gold dissolved, and suddenly the
so it concentrates it for you, right? Naturally.
Yeah, well, the chemistry of the ocean back then was different than it is today. So a lot more gold can go into solution, and there's all this. Remember, most of the Earth at this time is underwater, and you have all these, plate tectonics shows up 3.5 billion years ago. You had all this new magma, lava being spewed in, and always something fresh for the water to dissolve and scavenge whatever gold and other minerals are in it. And then you get close to the shore, into the shallow water, where you have this the early plant life generating oxygen. The oxygen changes the chemistry, but it's locally so. It's not like all over the ocean. The tide brings in a fresh batch of normal seawater, gold level in it. The gold starts dropping out because it's in disequilibrium all of a sudden. At night, the plankton stop doing photosynthesis, and so then the oxygen stops being pumped. So you have this continuous cycling, creating an environment of replenishment, and then this can be like 30, 50 kilometers down slope in shallow water, because these, like right now, you look at the basin, it goes down 4,000 meters, but that wasn't the case back then. I mean, it's gone deep because the weight of the stuff piling on causes it to dip lower. So yeah, over a huge area, and there's nothing transporting it originally. It's just dropping out of solution.
Sorry, John.
You lost. We lost you. Okay.
No, I'm back. But that brings up something else that I'm interested in, John. It seems like if the gold comes out of the water and ends up at the bottom, are you going to see in that layer of conglomerate where the gold also falls to the bottom of the conglomerate? What I'm getting at is, could it be that the gold is on one bottom part sort of near the contact, or do you think there's a potential for it to be more broadly distributed in that conglomerate?
Well, what you have is, remember, this gold is not growing inside hard rock the way a traditional hydrothermal system, where you have the fluids that are also saturated with gold and other metals, following whatever cracks there are in the rocks and then hitting chemical receptors and so on, and the metals dropping out and crystallizing in whatever space that's available. Here, and this is a big question that I hope the academics start weighing in on, is how can a gold grain with a nucleus grow itself? What is the mechanism by which gold in solution is attracted to drop out and become a solid attached to another thing? And again, right now, this bed, you saw those guys with the jackhammers having a real tough time banging this stuff. It's been hornfells. It's been baked. This rock is really, really hard. But at the time when these gold nuggets were growing, it would have been sandy. The boulders would have been loose. It would have been like you go down to the beach in a mess like that. So these things would be rolling around with the tide, moving back and forth, winnowing this, moving this and that, and so something like that was going on. And Quentin figures it was probably as small as a 2 million year period during which this all happened, and then things changed. Then the Mount Roe basalt starts flooding everything, and that ends that story. No more gold after that, except maybe higher up, except conditions
John,
are different.
Where this comes out to surface, they would have a cross section of from the top to the bottom. No, have they done any sampling along that outcrop, the face of it?
Well, when I was on the project in early August, Quentin was still unsure about where exactly in the stratigraphy the conglomerate beds sat, and he originally thought the Mount Roe was older, and it was maybe the Kailina basalt which was protecting it. But the Kailina sits on top of the Hardy sandstone, which sits on top of the Mount Roe. And at the Denver show, they revealed their cross sections, suggesting that the conglomerate beds are underneath the Mount Roe. Now, one of the things that we need to worry about is we think of this as a sheet. And you remember the nightmare De Beers had with Snap Lake. They thought it was a continuous sheet. And then when they started mining it, it would locally drop 5 or 10 meters, and it wasn't there anymore. And it just destroyed the economics of that mine. So they had to always drill ahead.
But like you said, John, that's an intrusion coming into finding its way through cracks.
Yes, but that happened afterwards. That faulting, that taking like the nice flat dike and then like a puzzle, cracking it and popping one puzzle piece up and one down, that happened later on through deformation. That in the case here, we did not have a perfectly flat bottom. There are little depressions. The stuff goes up and down. That's why, like, why is it sometimes like 2 meters thick? Why is it sometimes 10, 15 meters thick? And it's because there were natural variations in the basement rock, which this stuff would fill. And one of the interesting things is that Quentin's crew has found that there are some of these depressions have basalt in it. So there is something about some basalt flow that is younger. So it's in a period that's pretty turbulent. And in the conglomerates, he said some are clearly clasts from the older greenstone basement rock. Others are, however, look like sort of contemporaneous basalt, 2.8 billion year old rocks rather than 3 billion year old rocks. So that's the purpose of that scout drilling program they're doing, is to sort of just see how does locally the beds dip and thicken and thin and all that. Because if you're going in there with a diamond exploration equivalent of a 17.5-inch diameter drill, that's really, really expensive, and you're not going to waste your time where it dips shallower and goes like, you got to go deeper. I mean, is deeper because you got to go through all the garbage rock on top before you get the payload sample that you want to process for the gold.
Now, John, with this stuff, and here again, I think we get back to the statistical analysis and diamond distribution curves, and we're going to be seeing some gold distribution curves and bulk sampling being important. I think we I think we can do a good service to a lot of people watching this show and the story, to sort of prepare them for what kind of development curve you would expect, because to me it sounds like there's going to be a lot of similarities between assessing a diamond project.
Well, it's different because in a kimberlitic magma, you have the magma come from deeper. It encounters the Hartsbergite or eclogite where the diamond crystals have grown. And again, they've got a log normal distribution where you have a lot more smaller diamonds than you have big diamonds. And the magma picks this up, and during its ascent, it disaggregates these rocks that it's picked up and mixes it. And during the emplacement, it mixes it even further. So you get a random distribution of these diamond crystals in that final emplacement, whereas in this type of stuff you have mechanical sorting, and this is why I've always hated these conglomerate diamond projects. You can't use your micro diamond curve distributions to predict grade, because you don't know where mechanical sorting will have put the bigger ones and put the littler ones, and so you're measuring stuff. Okay, so you got lots of little diamonds, but maybe this is exactly where the bigger diamonds are not, because they're more rare. They'll end up somewhere else. So finding the pocket where they ended up. The nice thing about gold is we don't care if it's a speck of gold or a fist-sized nugget. You
They're
melt
all
it all down.
an ounce is an ounce.
Diamonds, you crush a big diamond into a bunch of little diamonds, and you got a bunch of nothing left.
Everybody's crying if you crack a big diamond. This stuff, an ounce of gold's an ounce of gold, John.
Yeah, like that big one that came out of the Caro pipe, they did break it. It was originally 1,500 carats.
Wow. So you don't think that is the frequency of, are you, is that going to, I mean, obviously you're going to want to look for the frequency of this, of the gold in these nugget form. Like I could imagine that there's some places where you get to the bottom of a dip at the of what used to be the bottom, and it might have a better chance of even bigger, like little jewelry stores down there.
You know, when they did that bulk sample, and it came out that there was 9 grams per ton in the tailings portion that didn't beep with the Steinert machine, everybody got pretty excited, wondering, is there a systemic fine gold component within the matrix of these conglomerate beds? And the reason that was exciting was you could use scout drilling, you know, small diameter scout drilling, to find where these beds are and then measure the gold grade. And while that's not going to be your average grade, if you're picking up like 5, 8, 10 grams per ton just from the fine gold grade on a systemic basis, well, that's good enough for an underground mine. Then the nuggets, that if that pumps it up into the 1 to 2 ounce per ton range, that justifies bringing in the big bulk sample machine. But you could end up having, just saying, well, we know it's good. Why waste all this money sampling for these large nuggets? We know they're there. We can justify developing this on the basis of the fine gold that we can measure. So let's just start developing this. But talking more recently to Quentin, he seems to have backed off, because I guess they have noticed variability in, sometimes there's a lot of large nuggets with no fine gold. Sometimes there's a lot of fine gold. So it may be a tough slog, and whether there's a cost-effective way to measure the gold content of these conglomerate beds, that is one of the tough questions yet that we need to answer, and that could still destroy this story. Because if it costs a fortune to measure the gold, especially when you go down dip, and it's just a science project. This is what some of the others are saying. You know, we don't know that it may be that there's WITS 1.0 scale gold in this system, but we will have no way of measuring it. We can only go in there and start mining it, and you know, cross our fingers that this is where the nuggets are.
Is there, well, would geophysics help in some of that, John, if you wanted to try to just focus on like jewelry stores closest to surface and then try to focus on as you go underground?
You know, I think the stratigraphy will be straightforward. You measure it with a drill. You look at it, you log it. You do a lot of petrography. This is where it's similar to diamond exploration. You want to know what kimberlite phase this is. So is this the dyke that we're following? The scout holes will be assayed for these other elements. They'll probably do gold simply because it's part of the package, but I doubt they're going to rely on the gold grade as an indicator of economic.
Well, and I hope they do a good job of communicating that, John, because if you're using a small diameter hole to go and look for nuggets, you could really it could go either way. You could drill and bang, hit something, or you could be right beside it by inches and have nothing.
See, this is why the precipitation theory is such a key part of this story. Because if we're dealing with the conventional South African interpretation that this is all pinpoint gold from deposits up in the hills that have been eroded and then dragged down some meandering river and then spilled into the basin, wherever it is that the river entered the basin, and then you have all this local sorting and things like that. That's huge variability, and you won't know where the gold is until you measure its presence. But if you have this type of precipitation thing in a relatively stable environment, and the stuff all over the place, all you will have to do is measure where are these beds, and are there chemical clues in the makeup of the bed that suggest precipitation would have been particularly active in these areas, and then you maybe, if there's enough of a baseline of gold, fine gold in it, that becomes the basis for the leap of faith that when you mine it, the nuggets will be there. But without that precipitation theory, it would be insane to make that leap of faith that when you move away from where there is gold, that you'll find more off to the side.
Right. So, John, you one of the great things that I probably started following you 25 years ago when I first got into the business was you were always on top of the stories and always on top of the rumors behind the stories. And sometimes those rumors behind the stories can be just as much fun as the story itself. What are some of the rumors and battles that are going on with Novo that you're on top of, John?
Well, probably the biggest battle was when they did that deal with Artemis, and we're going to spend $2 million, and then we get 50% of the rights to all the conglomerate hosted gold on all your holdings. And I think that the Aussies kind of thought, okay, here's these dumb Canadians, we're going to get them to spend a bunch of money and all this, and there's just this nugget crap, it never works anyways. Nobody makes money from nuggets. Only the TV producers do from those shows, So yeah, let's do this. And then, as word started to get out about what Quinton Hennig thought he had, then the Australians got pretty bummed out, and there were all these shenanigans trying to undermine the deal, weasel out of it. They weren't going to execute on that. And in the end, I think people like Eric Sprott stepped in and talked to the powers that be over there, and they sort of said, well, how about if we sweeten the deal so that you guys don't look so foolish? Let's give you 4 million shares. And those 4 million shares are now worth like $32 million. And Artemis probably, we don't know yet whether there are other claims, but this Purdy's reward, I've estimated that there's maybe 30-40 million tons of conglomerate rock there before you run into the 100% Novo ground. They have no chance of being as big as Novo, because Novo owns.
But they sure are making their stories sound like they could. It's when you read their website and stuff, John, it sounds like they have an interest in all of the WITS 2.0 story.
Well, yeah, and they have they've got cobalt, they've got this or that, and they even show their little quartz attached gold nuggets from their Silica Hills project. It's like they still don't understand the scale of this. What they really should be doing is going
just all in on this.
No, go on all these other properties and sort of saying, well, we've drilled holes through this. What do the logs say? Are there conglomerate beds underneath, say, that Mooney platinum thing that they optioned from Platina? What's going on there? But this company, it's, they're kind of relying on Novo to bring this sort of systematic professional approach. And one of the rumors that's kind of floating around is, okay, they're going to blow through $2 million pretty quickly, and they're going to be vested. Novo is starting to get its 100% applications faster than Quinton expected. He was figuring, 5 months from now, they're already starting to come in, and even faster than the Comet Well applications, which were done before he did his. So he can start moving off of the Artemis ground onto his own ground pretty quickly. And the same thing with the Comet Well. I mean, Comet Well just has these little jaggedy triangular pieces of the conglomerate bed before they run off onto the Novo ground. So there's some talk that Kirkland Lake, which is not going to have any chance taking out Novo, but what if it does a mercy killing on Artemis, becomes the partner on whatever it is there, and then starts getting serious about all those other holdings that
Oh, I like the sounds of that, John, because I made Artemis a little pick on my show when it was about 20 cents, so it's doing pretty good so far. I like the sounds of that takeover. Hey, John, what about, there has to be some animosity in Australia for, you know, like you said, this was well known, and then some Canadian farmers come down and to Aussie land and find all this gold. How's things? You know some of the people over there in Australia. What are they saying?
Well, they're pretty pissed. They're vitriolic. They say this is BS. People are gonna lose a lot of money. Precipitation theory is nonsense. The Pilbara's got bugger all in it. It's not like whatever there was in South Africa that fed the wits. They're going back to the traditional theories. And the irony is, they looked hard at the Pilbara in the 60s, 70s, and 80s for both uranium and gold, sort of quartz pebble conglomerate type mineralization, because it is the same age. It's got similar type of stratigraphy, and they never really had any luck. But there was that hole drilled in 1985 by CRA, about 50, 60 kilometers south of where Comet Well and Purdy's Reward is. And they managed to nip a half meter or so of 10, 11 gram gold in a quartz pebble type conglomerate, but never did much with it because it was like at 1,700 meters. But what they didn't do was look at the stuff at the base. At the base, you've got 50 meters of clasts and some little interwoven basalts that looks very similar to what we're seeing daylighting in the north. But because they were so wrapped up in the South African interpretation of what caused this to happen, like how's some immature looking conglomerate supposed to ever host a well-sorted paleoplacer gold deposit? So they didn't even bother assaying that. They were looking for the South African model, which people like Quentin say was the wrong way to look at it in the first place. And so you couldn't see simply because you weren't looking in these horizons. And of course, nugget gold, that CRA hole probably would not have hit a nugget in that 51 meters. So anything anybody ever did, if they did get a nugget, a piece of gold, well, every other hole they drilled next to it would have had nothing in it. So they just said some freak, and they would have dismissed it.
Yeah.
So it's that nuggety nature of it which would have made it impossible. And as for all those nuggets the fossikers are finding, well, that's something left over from who knows where. It's got no economic value. I guess all those gold deposits that used to be in the greenstone and they're all gone. There's just little roots left. And
the people are lucky enough to find it with the beep beep beep. Well, John, you got it to a good point now. I think that before we close, I just one thing I've noticed is that although the Australians are probably a little pissed that this was sitting right under their nose, I noticed that a lot of them are starting to get into the play now. So what is the area play on this, John? Are you looking at some of the other companies? I remember I read a thing you put out just recently that there is one I know you're watching. What are some of the ones that we should watch? I'm watching that Artemis and Novo. What are some of the other ones my audience should watch?
Well, Alan, I'm taking the approach that I took in 1992 when the diamonds broke and all of the slave craton ended up being staked, and that's, I think, an even bigger area than the Pilbara craton. And then I started looking at who has some evidence of indicator minerals, and then we ended up, there were multiple clusters found outside the We Got It All Ekati cluster, and that was huge. And there was a whole year of incubation where miserable little companies like Kettle River and Dentonia and Horseshoe and Williams Creek, they were trading a dime, 20 cents, 30 cents or so, and Kettle River hit $19 when they discovered the stuff. So I'm taking the attitude, okay, let's first round up all the companies that have land on the Pilbara. Then we look to see, okay, who's in the sort of part which is greenstone basement, because that has zero chance. However, because of these remnant scabs, because this stuff was quite extensive, you can't dismiss even these companies that just have lithium potential pegmatite type stuff. They may have accidentally staked some blackish rock that it just, because of the way you stake claims in squares, they couldn't avoid that stuff. So some of these things are going to be potentially interesting. But beyond that, sort of in the northern and northeastern part, I'm looking on the rim, the northern rim, where you would have the stuff shallower. Now, down in the middle, you have Rio Tinto, Fortescue mines, I think even BHP with their big iron mines at surface, and they may be several thousand meters above these conglomerate beds. That's going to be expensive to explore, and we still need to have that question answered. Is there a cost-effective way of reliably measuring the gold content? The area that's going to be kind of interesting is on the western margin, where again the conglomerate beds conceivably daylight before they sink into the basin. So it's going to be where this target horizon is reasonably shallow, reasonably accessible, that's going to be the focus. So I've created a Pilbara WITS 2.0 resource center on my website. I'm adding all the companies there. You can see the charts, you can see whatever news releases, you can go into my profile and see what maps I've scavenged. I'm pretty annoyed at the Australian companies with the shoddy job they've done with their websites. I mean, they need to step up their game if they want the public to pay attention to their stuff. In fact, I'm seeing some people going into the geological survey system and dragging maps and actually creating graphics for these companies and sharing them into hot copper. Basically, you have investors doing the work that these companies should be doing. But I predict these companies, they're waking up, they're realizing they may be sitting on something really, really valuable for them. They're going to be, I think, publishing a huge amount of information. I'm going to be all over it, tracking it, looking at the geological mapping, seeing if they've got a program to do it, monitoring the results. And of course, this is where the work that Novo's doing right now is really important. They're going to set the standard for how do you assess these gold nugget bearing conglomerate beds. So everybody should be watching really carefully.
If it does turn into one of those classic, Diamond Fields types area play, or the Northwest Territories, you're going to want to be on top of everything. And I'm going to use this opportunity to give my audience and everybody watching this that is not a member of John's website, if you're serious about investing in the Australian plays or any plays in the mining space, you have to be a member of John's website. He doesn't pay me to say this. He gives me a free membership where I can go on and I can experience all the tools that he has. If this turns into what John is portraying as a potential for one of those big area plays, you're going to want to know in depth all the details. If you're not a member of John's website, make sure you get on top of it. It's worth the money. Hands down, you won't find as much good quality research and how to evaluate these plays. And John's going to be on top of everything, and we're going to have to get you on a bunch of shows, John.
Yeah, and by the way, I do unrestrict everything after 30 days. So, if you just want to sit back and relax, and another point I want to make, I mean, I have almost zero exposure to this play. But if this is the extraordinary thing that I think it is, there will be so much money coming into this space. It's going to be recycled. The media is going to be all over it. Screw the cannabis and blockchain, cryptocurrency garbage that everybody's jumping into and creating tulip bubbles out of. This is going to be an old-fashioned gold rush on a scale never seen before. It's precisely also because there are so many these little companies, even Fortescue Metals. I mean, you could see Andrew Forrest waking up one day and saying, gosh, we should spin out the non-iron rights that are, whatever, 1,000 meters deep, create an entirely new company, raise a ton of money, and see if we're sitting on a big chunk of WITS 2.0. This is going to be happening at all levels. This is what's fantastic. Is so many groups unwittingly are possibly sitting have a piece of WITS 2.0. And then the public, as they come in, they've missed the boat on this, or those who sold too soon because they didn't think WITS 2.0 was possible, they're going to be caught with the bug of discovery exploration. So all these groups, you know, remember we were going through the zombies looking for the real groups and the ones that deserve to be rescued. These groups are all going to come back to life. Those that have interesting geological hypotheses, strategies, interesting land position, just undercapitalized for the last 20, 25 years when it was all optionality, demonstrating of you know, old failures that they now work at higher metal prices. We're going to have an incredible exploration boom where these companies will be raising a lot of money. And you don't need to be like Novo and end up owning 1 billion ounces. I mean, how are you going to mine 1 billion ounces in any of our lifetimes, unless we become immortal? But you find a zinc deposit or another 5 million ounce gold deposit in Nevada. All these things can take some little 5-10 million market cap company to $100-200 million. Those are huge scores. So if WITS 2.0, if you don't believe it, nevertheless, pay attention to it and be ready to act with all these other juniors, which right now are still suffering a bit of a bear market since that bit of a turnaround we had last year.
But we were, you know, when we were doing our zombie shows, John, we talked about the potential for exploration renaissance. And, you know, we needed something like this to come along. GTT up in the Golden Triangle, that looks like something real. So there's a few different things starting to boil up here, John, and nobody can say the animal spirits aren't there when it comes to exploration if you can deliver.
That's for sure. And I would often sit there and say, okay, there's the space has gotten so big that another Voisey's Bay, another Diamant, even another Briax, I mean, they're just not big enough. They'll be quickly recognized. They'll go to full value. Some big producer will absorb them, kind of like happened with Aurelian and Fruta del Norte. And the public's imagination will never be spiked again. But then when I saw this in mid-July and understood what it was, I realized, just like that day when I saw with that first fax in the
he was talking about when he found out about Lac de Gras, and that's what made John a name in the business. So I think we've had a little bit of technical difficulty, but John has been more than generous with his time. Oh, we got you back, John. We cut out at the facts part. I finished off a bit of the story, but you go ahead.
Yeah, no. I guess the point I was making is the scale of this is extraordinary. It's the kind of thing that can recapture the market's imagination for what I think is a dying ecosystem, the junior exploration game. The regulators, the banks have gone to war on this type of stuff. Speculators have shifted to, you know, volatility gambling and so on. It's like a breath of life for a space that was under severe stress thanks to structural changes in the market. And this time the internet's going to actually help, because people will be able to see what others are doing. Even the share collective that I'm involved with, this is hopefully they go live in a couple of months. This will become tool for people to quantify this. What's this worth? Is it too much? And all that. We're finally getting at a convergence.
John, it almost sounded like you planned this to have your tool, the stock collective, could be exactly what we need, and the discovery that could be what you designed that share collective for is all coming together.
Well, Novo and its WITS 2.0 is like a godsend in my view.
Yeah, perfect. Well, John, I just want to say on behalf of my audience, you've done a wonderful, thank you very much for your time. I want to reiterate to people that John today, he laid out a bunch of gold nuggets as far as Novo goes, but also gave us some good insight into what's going on around them, what to look for. I really want to invite people be a member of John's website. It's worth the money. John, thank you very much for your generous time, and we've got to get you back on soon. I love having these chats. You and I are to the core, we're exploration guys, and it's fun to have another exploration exciting time, and it's been too long, John.
Alan, it's been fun going through this stuff.
We'll get you on again soon, okay, John?
Thanks a lot. Yep, for sure.
Thank you very much, and I'll send you a link, John. I'm going to close the show off here. You don't need to stick around for this part. It's the formality, but I'll send you a link with the where to get the show.
Great. All right. Thanks, Alan.
Thank you, John. On that note, folks, again, I wanted to, I think John gave us some great insights into what's going on in Australia with this exciting Novo play. I learned some great information that about what I'm looking for. I really have to stress again that John is going to be on top of this story, and he's going to be the one who I think is going to find those other winners besides just Novo. So go check his website out. It's kaiserresearch.com. That's KAISER research.com. And as you can see in the background, my companies where I'm the president and CEO, which is Alset Minerals and Advanced Gold. Advances in silver and gold. Alset's in lithium. These other companies, Sirius, Premier Gold Mines, Wolfton Resources, Tudor Gold, they're all sponsors of my website and help me to bring these shows to you. So please check them out. Check out John's website. Become a member of John's website. It's worth the money. We'll see you soon. Have a great day. And thank you for joining us.